So with the FDIC closing two banks this week, the Silicon Valley Bank and the Signature Bank, there was a lot of volatility when the week kicked off. But then news came out that Credit Suisse wasn't going to get enough of the financial backing that it needed, and we got even more volatility. Volatility is great for day traders and stock traders because the stocks will move around a lot. But if you're a long-term investor, sometimes it can feel a little bit overwhelming. But I'm here to let you know that there are ways to deal with the volatility. And one of the big things that I do is to look at them as a long-term sale. Since I'm going to be holding my stocks for years, when the entire market sells off, that actually provides a buying opportunity. If a single stock sells off, I have to be worried about whether or not the company's broken. But if everything's selling off, it's a different kind of situation. That being said, you may have noticed this week that people were selling out of the financials and moving into technology. The Nasdaq actually finished the week up 4%. So I have a couple of rules that I follow when it comes to investing. First off, I can only buy on red days and I can only sell on green days. And basically what that means is I don't get to panic sell and I don't get to have FOMO or fear of missing out and buy into a rally. My second big rule is that I always have a plan for both directions for my stocks and all of my investments. What am I going to do if it goes up tomorrow, and what am I going to do if it goes down tomorrow? And sometimes that plan just means I won't do anything because it doesn't get near a selling target or a buying target. But it's important to make that plan before the volatility kicks in. Finally, it's always important to buy in stages and sell in stages. Since you can do this a share at a time, there's no reason to go all in or leave an entire position. It's better to trim your profit slowly on the way up or add to a position slowly on the way down. That way, if you get surprised and it goes too far, you're not without a position to do. I added to my long-term position in Schwab once more when it sold off significantly on Monday, with a buy that went through at $51.07. Schwab serves as an excellent example of how I manage risk in my portfolios. Because I do want a long-term position in Schwab, I did add at the key support levels that I had. However, I'm also careful to think about how much money I'm willing to lose in this position if it goes to zero. Like I said last week, I do have confidence in Schwab and I think it will last for the long term, but that doesn't mean it will. Anything can go bankrupt, and as an investor, I need to think in terms of possibilities, not probabilities. I'm not a trader here. Accordingly, I have the entire position planned out in advance. All the way down, I know where I'm going to buy, how much I'm going to buy, and how much I'm willing to risk in its entirety. My next sell target is up here at $85.78, which is a high from 2023. And the reason I'm not going to take any profits sooner than that is this is a long-term position. I think once the dust settles, Schwab will eventually get back up to that level. My next buy target is down here at $45.17, relatively close to the low of the day on Monday. And if we pull back on the weekly chart, you can see there's plenty of other areas where Schwab might find support below that area. And these will be potential buy targets for me into the future. Next up, I took profits in Nvidia, the second time I've done it in 2023 on the 17th at $260. You can see that Nvidia's had a pretty epic run from its lows. In fact, if we do a little bit of a measurement, you can see that it's 90% off of its lows in just December. So it was imperative for me to take these profits. I do think we're going to see a bit of a pullback, and this sale locked in 11.04% in gains on shares that I bought for $234.16 back on January 21st of 2022. The sale lowered my per share cost $14.15 from negative $25.17 to negative $39.32. And again, that means each share that I hold of Nvidia is still adding $39.32 in addition to its current value. From here, my next buy target is down here at $145.13. And you can see that it did find a lot of support there in the past. Now it's possible it won't pull back that far, but I've been in Nvidia since 2016 and it regularly pulls back 30 to even 50%. So it's a very possible target, which I may raise in the future. My next sell target is $288.67. And if we switch to the weekly view, you can see that that was the high from back in 2022. And that's where I'll take more profits because Nvidia will have been much larger than the allocation target for my portfolio. As an example of buying on a red day, I bought Dutch Bros on the 17th at $29.20. And this buy locked in a 23.56% discount on shares that I had sold for $38.20 on January 30th. It also lowered my per share cost 1.25% from $35.95 to $35.50. And from here, my next buy target is $27.50, which you can see was the low of 2022. And my next sell target is up here at $41.10, which you can see was the high of 2023 so far. I decided to take profits in my meta position on the 15th with a sale at $193.80. And as you can see, this is selling into a green day or selling into a rally. This sale locked 14.32% in gains on shares that I bought for $166.05 back on June 13th of last year. It also lowered my per share cost $258.40 from negative $64.6 to negative $323. And a negative per share cost means that I've taken all the initial capital out of the position in addition to profits, in this case $323 for each share that I still hold. From here, my next buy target is $113.60, which you can see was a little bit above the low from 2022. And my next sell target is under Facebook's all-time high at $377. I decided to open a speculative position in the regional banking ETF KRE this week for obvious reasons. As you can see, it sold off epically from its high in 2023 all the way down to its low on Monday. It dropped 35.82%. I made my first buy on Monday at $44.17, and shortly after that, KRE bounced because it looked like the other banks might be coming in to save the day. But then it started to lose support later in the week. Since I had started with such a small buy, I made my next buy on the 16th at $43.23, which you can see was pretty low on this day, and it was a red day at that time. This lowered my per share cost 1.06% from $44.17 to $43.70. And from here, my next buy target is $37.25, which you can see in the past was a regular point of support. My next sell target is up here at $56.90, where you can see that there was resistance in the past. Because support will become resistance into the future, I do believe we'll see it make an attempt for this level at some point and then pull back. It's important to remember this is a speculative position, which is why it's in my smallest portfolio. We have no idea how the government's going to treat these regional banks in the future or how much regulation is coming for the banks in general. Over in the speculation in play portfolio, I added to QID, which is a triple leveraged ETF that goes to the inverse of the QQQ, which is the Nasdaq. And I made another buy on the 16th at $20.05. As the Nasdaq rallied throughout the week, you can see that QID, of course, sells off. It's the inverse. And so I wanted to build up a little bit more of this position. It's a very small position as it's in my speculation in play portfolio, but I still wanted to add a little bit more. And this initial buy lowered my per share cost 0.25% from $20.20 to $20.15. From here, you can see that my next buy target is the low of this day at $18.55, and my next sell target is the high that I just saw a few days ago up here. And this is where I'll pull some off the table. And another great example of buying on a red day. I added to my Airlines ETF position on March 17th this week at $17.42. This locked in 12.02% in discounts on shares that I sold at $19.80 on January 19th. It raised my per share cost $6.83 from negative $2.68 to $3.95. In other words, this actually added capital back into the position. When we switch to the weekly view, you can see that my next buying target is $14.84 down here in the past, and my next sell target is $21.16, which was a high from 2023. Looking at the investments in play portfolio this week, you can see that Coinbase was the winner, up 40.44% this week alone based on how much Bitcoin had rallied. This week's loser was Rivian, down here at 8.12%. With the EV sector under pressure and interest rates rising, Rivian's going to find it very difficult to raise funds, so the stock just keeps making new lower lows. Over in the speculation in play portfolio, you can see that AMD won the week with an 18.29% gain as people slipped out of the financials and moved into more reliable technology companies that could do a profit even if there is a recession in the near future. Accordingly, this week's loser over in speculation in play is Virgin Galactic, which dropped 16.3%. Once again, this company doesn't make a profit right now. It has no service. So it's pretty shocking that it still has a gain of nearly 15% on the year. That being said, I do expect to see the selling continue in Virgin Galactic if the markets remain weak. Since it doesn't make a profit and it will need to take loans out in order to survive, it's going to be under pressure. Finally, looking at the investments in play portfolio's market cap, you can see why I had to take a sale in Nvidia this week. Even after my profit taking, it is 7.18% of the portfolio, which means it's still in excess of the target allocation size of 7.14%. However, since Nvidia is having such a good time of it, I am going to let it run hot, and we're going to see how high it can go, with my next price target being a lot higher than here, where I'll take more profits and reduce the position size at that time. Outside of that, you can see Apple's also growing in size, as is Boeing. because people are also shifting into the industrials, and that airline supercycle is very much a real thing on the horizon. As we go into next week, the big news will be the Fed meeting, which is coming up on Tuesday and Wednesday, where Jerome Powell will announce whether or not he's going to do a rate hike. A lot of people in the markets think the Fed is going to pause next week, and if it does, it is possible that we'll see a short-term rally. But make no mistake, if the Fed pauses next week because they're scared, we should be scared too as long-term investors. If they do think there's something wrong with the financial system, that is not bullish for the markets, even though the knee-jerk reaction will be a rate pause means it's good for stocks. Personally, I think Powell will raise at least 0.25% next week because he will want to show that he has confidence and that he's continuing to fight inflation. And the only way he can do that is to continue raising rates. And like I said, a pause would be a bad thing. So I do think that Powell will raise rates next week, although I think a half-point rate hike is completely off the table. If you want to learn more, check out my website, getirk.com, which is always 100% free. Please hit like and subscribe, and I'll see you in the next video.